Hi, this is Jerry Kelman.
Good morning. Hi, everyone. So I think we can go ahead and get started. We're working on audio for my colleague, Jerry Kelman, who I know is on the Zoom. Jerry?
I'm on the Zoom.
Okay, I think we're still working on getting audio. I'll go ahead and get started, though. My name is Catherine Petrus. Thanks for coming today to our workshop. I'm a senior CRA analyst with the National Community Reinvestment Coalition. And today we're doing two workshops that are centered on two community benefits agreements that we announced earlier this year. So I'll share a lot of specifics about those, but also some background about what led to those. A little bit about NCRC. We are an organization that was founded in 1990. We're a coalition of about 600 community-based organizations, and NCRC and all of our members work to promote fairness in banking, housing, and business development. And the heart of our work is the Community Reinvestment Act, and we share its purpose of promoting a just economy for everyone in America. So a little more about today's presentation and workshop. I'll give you an overview of community benefits agreements, how the process works to secure those from banks, and a little bit about why we engage in those. I'll share some specifics about two CBAs that will impact Oregon in the coming 5 years. And then I want to talk about some specific commitments in those CBAs that relate to housing development. And I'd love to have the second part of the workshop be more of a dialogue where we can hear your challenges, ideas, and some priorities for the work you're doing, because you're the experts on the ground that we hope will inform the CBA implementation. And then I'd like to share a little bit about what's next, what the CBA implementation process looks like, and talk about an Oregon Reinvestment Coalition initiative that's about to launch in October. I want to check audio again and see if Jerry is available to say hello.
Can you hear me?
We can hear you.
Oh, that's great. Hi, glad to be with you, even though I'm not quite in Oregon today. I'm a senior advisor to NCRC and was the lead person on the CBA with Umpqua and Columbia. And for those of you who remember, helped organize the Oregon Reinvestment Summit we held 5 years ago in Portland.
Great. So Jerry and I work together on NCRC's organizing team, and a big part of our work, as you'll hear today, is community benefits agreements. Introducing community benefits agreements starts with redlining. This is a redlining map of Portland. I'm sure you're all aware of what redlining is, and it was the motivation for CRA, which was a series of legislative attempts to end redlining in the 70s. And the CRA is largely what motivates banks to enter into CBAs. Short background on redlining: it was a decades-long practice of excluding lending in certain neighborhoods that were described as hazardous by the Homeowner Loan Corporation, which was an agency set up after the Great Depression. And of course, it led to decades of disinvestment in communities, and you probably recognize this map. It has had lasting impacts on communities up to today. So in the 1970s, there was a series of federal laws enacted to end redlining. The first one was the Fair Housing Act, prohibiting discrimination. In 1974, the Equal Credit Opportunity Act also prohibited discrimination in lending. In 1975, Congress passed the Home Mortgage Disclosure Act, which is a data disclosure requirement. That's where NCRC gets a lot of its information. The annual HMDA data that is published tells us a lot about bank lending and trends. And then in 1977, the CRA was passed, and it's the only one of these 4 laws that actually gives the banks an affirmative obligation to do something. The others are just prohibitions and disclosure requirements, but CRA actually requires banks to meet the needs of all the communities it serves, not just selective wealthier areas where banking is easier and maybe more profitable. Banks don't exist just to serve certain communities. They exist to serve all the communities where they're located. And I won't go into more detail about CRA, but I wanted to share these slides will be available. And if you want a deeper dive into CRA and how it works, we have a video on our website that's an hour-long description of the CRA and how banks are examined. Just one key element of CRA I wanted to mention is that banks are largely evaluated in comparison with each other. So they're measured against each other. So a lot of the data analysis work that we do looks at market trends, how the banks are doing in the aggregate for a market, and then we'll use that as a benchmark to see if a particular bank is above or behind the market. CRA is also a statute with, I'll say, difficult enforcement. It really requires communities and neighborhoods to participate to be effective. So CRA exams are done every 3 to 5 years. Until now, at least 98% of CRA exams result in a passing grade. So that's a pretty low bar. So we need groups like you all to enforce CRA, to monitor what the banks are doing. This is a quote from Gail Sincata, who was really instrumental in getting HMDA and CRA passed in the 70s. And she fought hard for it and defined it really well. It's really our responsibility to enforce the CRA, to hold the regulators and banks accountable. So moving on to community benefits agreements, like I noted, they are motivated largely by CRA. These are agreements between a bank, NCRC, and our members. Also, non-members will join in CBA campaigns. So our organizing team works to recruit community-based organizations throughout a bank's footprint to tell the bank what their community needs. CBAs are not legally binding agreements. So again, enforcement really requires a lot of work by NCRC and communities to monitor the banks, tell them what they're not doing enough of, and hold them accountable for their commitments. CBAs usually include goals to increase CRA eligible activity. So we try to benchmark what they've been doing in 3 to 5 years prior to the CBA campaign and use that as a baseline and ask them to commit to make increases. We also try to get commitments that are more qualitative in nature or a little bit outside the scope of CRA, but relevant to CRA. So we ask banks to publish their staff diversity reports. We'll often ask for supplier diversity commitments and disclosures relating to supplier diversity programs. You all probably know it's a challenge to get banks to open and maintain branches in low and moderate income communities. So that's always something we ask banks to commit to do, to either, we always ask for an increase in branches in LMI communities, and at the very minimum to maintain their existing level of branches in LMI census tracts. And then finally, we want the CBA to include some commitment to continue working with NCRC, its members and communities where the bank is located. And so we asked for commitment that the bank collaborate with NCRC to form a community advisory board, which is a small group of community leaders throughout the bank's footprint that can be a conduit to meet with the bank, share information from their community and share ideas, and also get reporting from the bank annually on the bank's performance. So some more specific examples of CBA commitments include mortgage increases, an increase in small business lending. We like to get not just an overall mortgage number or dollar volume commitment, but a commitment to increase loan units so that we're not just getting a bunch of jumbo loans, but we want to see a volume of increase in smaller dollar mortgages. And we always ask for commitments to increase lending by race and ethnicity, and also at the state level, so that we are assured that increases are spread throughout the bank's footprint and not concentrated in certain areas. And then additional qualitative goals we ask for usually include funding new partnerships. So encouraging the bank to make new relationships in their philanthropy and lending and investment activity, and not just stay with the existing organizations that they've been working with previously. So when do we get a CBA or launch a CBA campaign? I mentioned earlier, CBAs are largely motivated by the CRA, but there's also a federal law on mergers that require a bank to show that the merger will meet the convenience and needs of the communities it serves. So a merger is often when a bank will call NCRC and tell us that they want to engage in a CBA campaign with us as part of their merger. And mergers really are our best opportunity to put pressure on the bank to increase CRA activity. And I think the main other time that we'll launch a CBA campaign is a renewal of a CBA. So if we've had a CBA with a bank and it's expiring, they'll often reach out to us, or we'll reach out to the bank if we don't hear from them, and suggest that we renew the CBA, and we'll treat that as a new campaign. So a little bit about the process of how we go about creating the CBA. NCRC plays the role of a facilitator. We organize members, groups like you all, to come to a listening session, which now are all virtual, And the community groups, everyone has 3 to 5 minutes to talk to the bank. Usually the bank CEO is in the virtual meeting, and we ask community groups to share what their most pressing needs are, what their priorities are, sometimes specific information about the bank and what it needs to improve on will be discussed in those agreements. And then we take those recommendations and put them into a document for the bank that we share with the bank after our meetings. And we really try to include every recommendation that we heard in those meetings, and then let the bank take that information and put it into a first draft of a CBA. So that goes to our other role in the CBA process is in research. We do analyze in a merger context for a CBA campaign. We'll analyze the bank's mortgage lending, small business lending, branch presence, and we'll share that data with our members, and that also informs the numeric increases that we ask the bank to commit to. I'll talk a little more about that when we get to the specific Umpqua and US Bank CBAs. So just a little pitch for getting involved. CBAs are really a model for bank and community collaboration. Our approach is really collaborative. We want banks and community groups to work together. When we have a CBA with strong commitments, for that CBA to be successful is in everyone's interest. So it's great to get involved with implementation. And ultimately, of course, the goal is to direct more resources into neighborhoods that have been disinvested for many decades. And hopefully, through participation, the CBA process will help build lasting relationships between community groups and banks. So I want to pause here and see if Jerry wants to add anything about CBAs in general before we get to our specific bank CBAs, or if there are any questions.
Sure, let me just my little context. So the CBAs are huge. They run from about $11 billion to as much as $90 billion implemented over a 3 to 5 year period. And it's not a pot of money. It's a description of all the activities that banks will do for low and moderate income communities and communities of color. And there's metrics attached, which usually commit the bank to doing a lot better than they had done before. The banks have the capacity to build out nonprofit organizations through philanthropy. They can make or break housing deals, retail development deals. And before a few years ago, banks were significantly underperforming in the Pacific Northwest. So that's begun to change with agreements that Catherine will talk about to the merger of Umpqua and Columbia banks, the biggest bank in Washington, the biggest bank in Oregon, and with US Bank, which is either the 5th or 6th largest bank in the country, depending on how you count it, and began in Oregon. So there's real opportunities for housing development organizations, other community development organizations to begin to expand capacity, volume, and to secure things that are favorable. But it all depends on the continued engagement of organizations from Oregon, and there's been quite a bit of that.
Hi, everybody. Peter Dean from Council Oregon. Also on the NCRC board. And so I helped participate in one of the first CBAs that they did, which was with KeyBank. We have our friends from KeyBank, a friend from KeyBank here. So hi, Brett. And I think the important thing about this process is, folks that are doing the work get to have the face time with those CEOs. And so they really get the chance to hear what some of the shortcomings are at the bank or some of the strengths of the bank. And so as these agreements are put together, it's a real opportunity to make sure that they get those in there. And I think when you look at what came out of KeyBank, particularly here in Oregon, I think you saw some really good pricing come for LIHTC projects as well as other investments. So I just wanted to say hello and hope that you guys will stay engaged with this work. Thanks.
Thank you.
Are we taking questions?
Yeah, we can pause for questions. Just if you'll pass the microphone around so people who are on the Zoom can hear.
Yeah, I just had a quick question. Is there a standard term or length of these agreements, or maybe we're getting there, but
We aim for 5 years. There 3 to 5 years is the typical term.
okay. And when you say community groups, you mean members of that actual locality, or are these like NCRC organized groups, or?
It's both NCRC members who are community-based organizations, and then others that our organizing team has relationships with, but focused on groups that have a presence in counties where the banks have branches.
You're watching the organization happen before your very eyes. We're sending a sign-up sheet around, and you can, if you want to stay in the loop, that's a vehicle for you to do so.
Thank you. So I come to the world of banking, and I understand how it works. My question is the CRA, Community Investment Act. The way it's what I'm trying to say, the penalty are very lame. To put in a easy way, it's like me as a minority. Tell me if I've done something wrong, I'll just put the least things that I know I won't get affected in life. The banking world is very one-sided. If we go to the minority, to the underdeveloped areas and ask them what will we need to do in order to the bank to feel the pain, I'm sure it will be different right now. So my thing is, it's just an advice that the community has to be involved. However, we don't have the resources because the bank will not allow the community to be involved in giving those options how to deal with this. And it's very painful, basically. Thank you.
Catherine, let me can I jump in on this one?
Jerry, did you want to say anything? I think I heard.
Yes, if you can hear me. Can you?
Yes.
Okay. So it's true that the CRA evaluations, exams are not as tough as they should be. But the time when most strong community benefits agreements get negotiated by NCRC is in a couple of situations. One is when the bank merges or acquires another bank. And at that point, the bank is extremely anxious to get their merger approved. And that's why we're able to secure these large CBA agreements. What happens is, although the merger is almost always approved, they can be, if they're delayed, the whole merger may fold. There are often penalties if the merger doesn't go through by a certain time, or there are stockholders of the small institution may get cold feet. The whole merger may collapse. And the mergers are very high stakes. So the leverage actually around mergers is very large. The second time is if we have an administration in Washington that investigates. So when you have the Consumer Finance Protection Agency working, which it does under President Biden, did under President Obama, did not, no surprise, under President Bush, where they tried to kind of just shut it down. They're actively investigating, and they're they're catching banks in all kinds of discrimination, auto lending, all kinds of other racial discrimination. When that happens, the bank's extremely vulnerable on many levels, and they're very eager. And they often show up in DC to our office, say, gee, could you do a CBA with us? So you're right that the exam process is weak and needs to be stronger, and we're fighting to strengthen it. But there is leverage. And the third point is with any major corporation, there's branding issues. And brand makes a great deal. It's in a retail business, which banking is, having your brand damaged by disinvesting and being caught publicly doing or racial discrimination is worth millions, if not millions of dollars to some of these institutions. So we do have a leverage and we're willing to use it. Last thing I might say about that, it's sort of attention for you and attention for us. Because many of you here depend on banks to do the projects you do. You have good and friendly relations with banks. Some of your banking partners have been extremely affirmative towards you. So it's we're partners with lots of banks also, and work with them to try to see they do a better job at this. And so it's a delicate balance between pushing someone to do better and collaborating with them. And that's a balance we're all seeking for all the time. What I do want to say is that you need to do both. If you don't collaborate with the institution, simply trying to put pressure on them, it's not going to get you to where you need to be. On the other hand, if you simply, if you never challenge them to do better, and often it's at your allies in the bank who may want you to challenge them, because ultimately they have to reach the senior management of the bank also. So I hope that provides some context, but you're right, it could be a lot stronger when it comes to the exam process.
All right, well, I have two questions. One is in terms of engagement, do people have to be part of NCRC in order to engage in a focus group, as you described?
No, and if you're interested, I have cards up here and I would love to connect with anyone who's not a member but interested in CBA campaigns or learning more.
Okay.
So we often have non-members come to the campaign meetings.
Okay, and so in terms of the wider community engagement, what is your outreach to the wider community for them to even know about this? And then my other question is, what's the metric for how you would analyze how many minority or people of color loans or whatever that were issued? I mean, is it, out of the pie? What slice are we talking about?
Catherine, can you
So-
take the second one? I'll take the first one. Go ahead.
Oh, I was, in terms of metrics, we do have, I can talk, I'm going to go through some specifics in the next few slides about the commitments from Umpqua Bank and US Bank. So you'll see examples of the metrics, and as soon as the CBA term starts, we create a progress tracker that we send to the bank, and we ask them to provide numbers on an annual basis. Some are more cooperative about doing that than others, but the goal, and we can always look at their HMDA data on mortgage lending to see what they're doing. But our goal is to track their progress annually, and including lending to minorities, small business lending to businesses with under $1 million in revenue, and in low income census tracts. Those are the two small business categories that are reported that we can track. And then we ask for them to report on qualitative commitments as well. And we'll talk more about implementation later, but
So let me-
Jerry, did you want to
Yes,
address?
a little bit more of that one, then go back to the first one about membership. So now we've been asking, and we did get from Umpqua Columbia a commitment to become a leader in making minority mortgages to African Americans, to Latinos, and to Asians, particularly in greater Portland and greater Seattle. And they will provide us numbers as to how many mortgages they're making to each of those racial groups. There is sometimes some difficulty in doing that because you run up into affirmative action for whites that the bank can't cross over, and there's the bank has the option of doing, and we can push for this, what's called the special purpose credit district, which program, not district, which allows them to target minority mortgages where they've been deficient. But either way, we're trying to track that at every level, and often we're succeeding. In terms of membership and outreach, so we've had a very active presence in Oregon, but it sort of stopped around COVID. And I was going out to Oregon once a month, meeting with organizations, meeting with probably a number of you here. Catherine was doing some of that too. So we're reaching out that way. But what we're going to do now is we're in the process of organizing, or asking you to help organize. And Catherine will refer to this again, an Oregon Reinvestment Coalition. And we'll work directly with that coalition. Moreover, we work with organizations you belong to. I mean, if you work with Housing Oregon, then we're working with you. And so you can access the work through Housing Oregon. You can access through participation in the Oregon Reinvestment Coalition, which is forming in October. And best of all, as Catherine mentioned, you can also join NCRC. So there's lots of ways. And at every point, we're concerned that we not only have Black, Latino, and Asian organizations, indigenous organizations at the table, but they be represented by folks who are Black, Latino, Asian, and indigenous, and let me add immigrants of various kinds, religious minorities, racial minorities, which you are deep in Oregon. So thanks.
Hi, Jerry. This is Rose with CASA of Oregon. I was wondering, are there like report cards that are issued comparing the bank's progress in meeting their CBA agreement, so that as consumers, we can evaluate which bank is really fulfilling their agreement with NCRC?
So a lot of this has been handled, Rose, in the past directly in conversation. So we have an advisory committee, and people from some of you from Oregon beyond the advisory committee for the implementation of each agreement. People on the advisory committee then would report back periodically to the organizations that have been participating. It may be wise to formalize that in some way, and that's why don't we put that on the agenda? Whether you're there or not, we'll put it on the agenda for the October Oregon Reinvestment Coalition meeting. How can we track agreements? We're hesitant to. There's data, which is official data on how a bank is doing versus other banks. We can tell you who the 15 best and worst lenders to African Americans are in Portland, or to Latinos in Washington County. But what we don't want to do is to start comparing banks to each other in the course of a CBA, because sometimes a CBA is aspirational. That is, a bank is beginning to change its practices. Those practices may not show up for 2-3 years, which is why the agreement is several years long. But I think that's a great suggestion, and we'll put it into conversation at the October meeting.
Thank you. Yeah, I like the idea of a report card, and also enforcement that's not as lame as it has been, which I agree with. So yeah, we clearly have a lot of work to do, and we have to hold banks accountable. But as Jerry noted, we have to work together and pressure at the same time. So moving on to specific CBAs today, I'll focus more on Umpqua Bank's CBA because it's much more Oregon focused, but there are some commitments in the US Bank CBA that impact Oregon that I wanted to touch on as well. And the specific commitments I'll talk about relate to development for this audience today. So these two agreements were announced in May. The first one was in connection with Columbia Bank's merger with Umpqua Bank. And that is an $8.1 billion commitment. And then a $100 billion commitment was announced by US Bank in connection with their merger with Union Bank. These were both announced in May. And these are links to our press release about the CBAs. If you scroll down in the press release, you'll see a list of organizations that support the CBA. Below that, it's not always clear that it's down there, is a detailed summary of the CBA commitments. That's where you can find a lot of the information that's on these slides today and more specific commitments. This is a timeline to just give you a sense of how the process works. When a merger is announced, Umpqua and Columbia announced their merger in October 2021. We started reaching out to the bank to gauge their interests and willingness in doing a CBA. And then once we get that commitment from the bank, we schedule listening sessions or meetings with groups throughout our footprint. For the Umpqua CBA, we had 3 meetings with 75 speakers from Oregon, Washington, and California. And in those meetings, we asked the bank CEO to be present, but not talk. So the CEO and some other executives will join the meeting. They often send us a long like a marketing PowerPoint that they want to present, but we ask them to just listen. That's the point, listening first before developing the commitments. So once those meetings are done, we compile all the recommendations. We take NCRC's research on lending, historic lending performance, and we put together a list of recommendations for the bank. And then they come back to us with a draft. There's usually some back and forth. And then we'll share a draft with anyone who opted into the CBA campaign or participated, and schedule a meeting to get feedback on the draft. And always typically go back to the bank and say, you know, these are the top 5 issues that our members see in the latest draft. What can you do on top of what you've already committed to? And usually we get a few more tweaks or commitments out of that. So the CBA is then announced, and now we're waiting for the merger to close. I think Umpqua and Columbia expect to close their merger sometime during the 4th quarter. And then once that happens, we'll connect with them and start on the implementation process. This is a map of the branch network for Umpqua and Columbia. There's a total of 136 branches, so you can see what communities they're located in. And these are the communities that we want to see served by the CBA commitments, and also where we want to track lending and small business. So in the Umpqua agreement, they call out 4 key priorities that are sort of a foundation to all the specific commitments. The first one is to collaborate with groups in the 4 metro areas that are listed here, including Portland, to increase Black, Latino, Asian, and Native American homeownership. And that'll be the topic of this afternoon's workshop. Another priority is more relevant to this workshop. It's to provide reasonably priced lines of credit for acquisition finance and pre-development finance. Capacity building funding for minority-led organizations is a huge need that we hear from groups everywhere, really. So that's another area that we ask for specific commitments in the CBA. We also ask that the bank track and report back to us on funding for minority-led organizations, so that we can actually see specifically that they are focusing on increasing that support. And then we also asked Umpqua to commit to supporting policy efforts that can address some challenges and issues, in particular in the affordable housing space. So the CBA commits to $3.5 billion in community development loans and investments over 5 years, with, again, a priority on reasonably priced lines of credit for CDCs, for acquisition and construction, pre-development lending, and pre-development grants. Columbia also, some of the contacts there that we worked with really emphasized their commitment to rural communities. So they put a commitment to community development lending in rural areas, not just those 4 metro areas. And again, they agreed to prioritize financing minority-led organizations that have traditionally not received funding, or groups that haven't previously had a relationship with the bank. They agreed to increase philanthropy to $21 million over 5 years. They agreed to share information with us so that we can pass it on to our members about grant priorities. So what we've heard from a lot of groups is that they apply for grants, but they don't really know what the bank's priorities are, and if they understand the priorities or the goals of a bank's philanthropy program, they can target their applications. And I know that development for nonprofits is a huge lift, so having that kind of targeted approach hopefully can help. And again, capacity building grants for minority-led groups is another priority. And to ensure that that actually happens, they agreed to track CRA eligible philanthropy. I think a lot of you have probably heard the statistic that 2% of philanthropy in the US goes to minority-led organizations. So that's something that needs to change. So in terms of a branch commitment, there is a commitment to 4 new branches in LMI census tracts or majority minority census tracts. And this is across the whole bank footprint. So not sure this will impact any new branches in Oregon, but there's also a commitment at least to not reduce the number of branches in low and moderate income communities throughout the bank footprint. So plan governance and implementation will involve expanding Columbia Bank's existing advisory council to 16 members. NCRC will name 50% of the members. Ultimately, the bank has the final determination of who's going to be on the council. And then they agreed to release an annual report, with the first one being available in 2024. So the CBA term starts in 2023, so that should be the first calendar year we get data about. They've also committed to maintaining ongoing relationships with coalitions in Oregon, Washington, and California. And that's hopefully the coalition that you all will be a part of, that's launching soon in October. And Jerry, do you want to add anything about Umpqua implementation specifically? Okay.
I'm sorry. So I don't know if this is only true for Umpqua, but Umpqua is probably where we'll get started first. And so I'm fairly certain that what we'll do is we'll have at least 3 task forces, working groups, And those Oregon working groups will be in dialogue with folks from Washington, at least. To some extent, this bank has a presence in far North California, not the Bay Area, but we go up to Sonoma and Sacramento and the border counties to Oregon. So they're included too. So those will be the three that three issues that Catherine's already referred to. Capacity building grants from our organizations, the form and size and helpfulness of community development lending, housing development lending, and minority homeownership. And so those working groups, which will emerge from the October Oregon Reinvestment Coalition meeting, will make decisions on, given the commitments there, how the bank should structure those commitments, how to measure those commitments. It doesn't stop us from doing other working groups. I think that has to be decided more democratically. But I can tell you right now that a couple of issues, seem very, very prominent right now. One is anything to do with climate. For example, the Inflation Reduction Act, which is the Climate Act, right? Provides enormous money for energy and green retrofits to be implemented by contractors. So there's an opportunity to make a huge difference in carbon footprint in the same time, really help contractors, minority contractors, but the money will come from the federal government, go to the state, and anybody doing this work will have to be reimbursed, even though they have commitments up front to begin the work on particular homes. So in order to really expand and make use of this, both not-for-profits and minority contractors, small contractors, will need bridge loans. So it may be that the Oregon Investment Coalition want to focus on that also. There's a lot happening in terms of workforce and job training, but this is Oregon, and a large percentage of the people who need that job training are undocumented. So how do we get the banks involved in that aspect of workforce development? So there are issues that are specifically highlighted in the agreement, which we'll form working groups on, and it'll be up to you whether we form additional working groups on issues that you're concerned about. Those working groups will feed in directly into the folks who are representing Oregon on the advisory committee, and Umpqua has already agreed to do listening sessions with the groups on that. So I think there's a lot of opportunities here and process implementation. And all this should culminate, and we can all see how we're doing in a major event, probably a conference in the fall of 2023, sponsored by Oregon groups to assess the state of reinvestment in Oregon.
Thanks, Jerry.
Sure.
So
Could I just jump in? I've sent a sign-up sheet around. Did everybody get that who wanted to? Some came in late. Okay. And for those who are online, it occurred to me, we don't want to exclude you. I guess I'm the scribe, so send to me your contact info, your name, your organization, email, that's it. And to bketch, B-K-E-T-C-H, bketch @rockwoodcdc.org. Or to Catherine or to Jerry. It'll get to
either
us.
one of us.
Yeah, it'll get to me somehow.
Happy it'll go to you. I do want to say that Zoom has made things worse and better. I miss going to Oregon as much as I did. I'll start traveling a lot more now, but we're probably less than before. The world has changed. But with Zoom, it's much easier for us to begin to work in rural communities, even the major metro areas such as Salem, etc., via Zoom. So you may know us less if you're outside of the 3-county area, but that should change now. And please reach out. We tend to be able to see these agreements and the work implemented throughout the state.
Great. And Jerry and I have our contact information at the end of the slides. So please email us if you're on the Zoom and would like to participate. On to the US Bank CBA campaign timeline. It was very similar to Umpqua. They announced a merger with Union Bank in September 2021. And US Bank has a broader footprint, but very similar footprint in Oregon. Because the Union Bank footprint is mostly California, we did have our first meeting with California Reinvestment Coalition, and a lot of the US Bank CBA focuses on California, but we did ask for state level commitments outside California where the bank has a significant presence. So we did have 5 listening sessions with 125 groups from 23 states, not just California. And again, the CBA was announced in May. It's a $100 billion commitment and expected also to begin in January, pending the closing of the merger, which is still expected to be fourth quarter of this year. I wouldn't be surprised if this merger was delayed. I do think Umpqua is on track to close, but I don't know about US Bank and Union Bank. So the branch footprint is similar to Umpqua's footprint, and there are 138 US Bank branches, only 2 Union Bank branches. So that's why the CBA focus was really more on California, where the merger resulted in a much bigger change to the branch footprint. But there still will be some commitments impacting Oregon. So specific to community development loans and investments, there's a $31 billion commitment nationwide. US Bank has agreed to create a new special purpose credit program that targets capital to minority-led and minority-owned developers that work in affordable housing. And then they've created another capital program to finance $125 million in debt. And let's see. In their philanthropy commitments, they've agreed to $115 million over 5 years, focused on racial equity and access to capital. I think the highlight in their philanthropy commitments is that they agreed to support 10 organizations in every state where they have more than 95 branches, which includes Oregon. 10 organizations that the bank hasn't previously funded. So they will be gearing these new partnerships to organizations led by women and people of color. They also agreed to annually report on the race and gender of the leadership of these new groups. And they've set aside $10 million over 5 years to establish a community affairs team that will focus on rural and Native American communities as well. So another common challenge that we hear about is that bank philanthropy results in grants of $2,000 or grants that really don't make a difference in the organization's capacity, but the paperwork is as difficult as a larger grant. So we usually ask for a commitment to increase average grant size. So US Bank did agree to increase from an average of 18,000 to 30,000, which I think will be a much more impactful amount of money for a nonprofit. So similar to Umpqua Bank, the US Bank Community Advisory Committee will include members, an increase in representation from California, Washington, and Oregon. and the bank agreed to work with NCRC and CRC, which is the California Reinvestment Coalition, to identify members. They'll also meet with leaders and coalitions annually to report on the CBA progress, and they'll share annual updates with NCRC so that we can pass on that information to you all. And again, this is true for both CBAs. Once the merger is finalized, the banks should give us some local and regional contacts that we can share with members and people who have participated in or want to participate in implementation. So I wanted to start a dialogue about what you all see as challenges and maybe opportunities to deal with those challenges that might come during implementation. So before we get into those specifics, are there any more questions?
Catherine, I just wanted to highlight something. That would be
Okay.
okay. So we had several meetings of in the Portland area around of folks developing housing. And we really want to see a change in the ability of community development corporations, housing development corporations to access capital quickly. Because as you know, in Oregon, land is in such demand that when it becomes free, it gets sold very quickly. And private developers have had access to lines of credit for acquisition, where nonprofits generally have not. Some have tried to adapt to this. REACH, for example, has put together a bunch of program-related investments. It has some capital it can use for that purpose, but not everyone can do that. So we really want to look at lines of credit for acquisition and construction. We also want to look at whether you're able to access capital directly from the bank. We love CDFIs, they do great work, but if you have to go through a CDFI and you're going to pay 2% more for your your loan money, it may make the project impossible. And stuff can take longer in Oregon, it's complicated. So generally speaking, there's a desire for patient capital, and there's never enough pre-development money. So those are some of the things that we'd like you to also get some feedback on, and that groups in Oregon identified quite a few years ago now as being the primary needs, and we pushed for very hard in the CBA. So I want to make sure that I know there are a number of housing developers in the room, and don't be shy to get into the nitty-gritty of some of your situations, if you would. Thanks.
Yeah, I just had a question about the U.S., specifically about the U.S. bank CRA. To what degree do those commitments impact the U.S. bank CDC, their tax credit lending or tax credit investment arm?
I'll have to get back to you on that. The CBA it may not go into that level of detail on community development commitments. It might, I'll look into it though. If you'll share your information, I can look at the details of the CBA and see if it goes into that level of detail, but it might just be an overall community development lending and investment dollar amount that lumps everything together.
So if you have that metric, it means that it commits them to doing more. So they should be doing more tax credit lending, and they should be doing more lending specifically to the markets such as Oregon that we've identified as primary for the agreement. So we should work together to push for that. The devil's in the details. And so I'm not sure if your question was their willingness to do it, or developer fees and those kinds of questions in terms of how favorable it'd be. Which was it, both or one or the other?
If they're making a commitment to do more, I was interested specifically in the investments, whether it's, pricing was mentioned earlier is something that's been something they've tried to
Yes.
higher percentage of investments. It could be a variety of things.
Yes.
Understanding that the bank proper is separated from the CDC.
So we need to work together so that we can be aware along with you that these things are needed and that there are requests coming in right now for some more favorable lending on those terms or prioritizing of groups that have been left out. And we have specific examples of that in Oregon.
And if I could just add, if we're using Key Bank as the example, it was identified that we needed more tax credit investments at a favorable rate. And so, they put a lump sum number in there. They don't specifically say, this is what we're going to do to make sure we're making more investments, but pricing was basically where it came down. And so then and I sit on the advisory board to make sure they're implementing this. Sometimes it's hard because they don't disaggregate the data enough that you can see it by region. So since that was an early agreement, we've learned since then, and we need to make sure that we've got that track data so that we can address things like that. You're likely going to see that it's going to be through the CDC, US Bank CDC, for those investments will then be made into tax credit projects.
One more note about that is that in CRA evaluations, the CDC investments are sort of lumped into the bank as a whole, as an affiliate. So it's evaluated together with the whole bank's community development, lending, and investment portfolio. So if the CBA has commitments to increase that type of lending and investment, you should see that across all affiliates. There was one more question.
Yeah, and I'm not sure if this is where we're going, and if so, you can just hold off on answering. But to respond to Jerry's inquiry about development lending and whatnot, my name's Celestina Teva. I'm with CASA of Oregon, and I think that the increased access to bridge financing or lines of credit and pre-development funds and whatnot is certainly great, and I know needed. And thank you all in general for this work, because it is also sorely needed. And I'm wondering if in any of the CBA negotiations that you've already done, or as you're kind of coming up with some plans for the future, if the conversation about non-traditional housing ownership type lending, long-term lending for cooperative housing, and there are a lot of variations that are being developed and played with at really small scales that we are having trouble finding long-term, not even just the bridge and the lines of credit acquisition financing, but long-term lending for new housing types.
We do always hear a call for more, a bigger variety of financing tools for land trusts and co-ops, shared equity types of ownership. I haven't seen a whole lot of commitment specifically to those products. I know that I think Fannie Mae does have a cooperative mortgage product that I don't think many banks have started to offer. So honestly, what I usually see in response from the bank to those recommendations is a commitment to explore developing products. So not a real solid commitment, but we hear that there is a need for that everywhere.
So the issue with those products is often the bank doesn't understand them. Not that they're all that difficult, but banks don't do things they don't understand, and they don't like to do things. They don't have staff who's got familiarity with it. So CASA of Oregon has been educating, banks serving Oregon about co-ops now for so many years. We need to do that. If you have a land trust or obviously, I think that land trust organizations in Portland have been also doing that kind of education, but let's work with the bank. Let's sit down with them saying, do you have anybody with this expertise? How will you find it? We really need to sit down with them and make sure they understand it. Because what they think may be riskier, what is in fact often, a more secure loan. So Proud Ground and CASA and organizations like that have been doing education. The rest of you should do that too. Let's work with these banks. Let's see they understand the loan, and they're more likely to make it, I think.
Hi, Jackie Keogh from Core Community Land Trust. My question is, what is NCRC doing to ensure geographic equity and diversity of industry, as Jerry mentioned, is well represented on these community benefits agreement, groups that are going to be steering this these investments?
Geographic meaning rural and urban, or meaning this state versus that state? Just be a bit more specific.
Yeah, so definitely urban versus rural, but also if we look at Oregon, making sure that there's representation from Eastern Oregon, Southern Oregon, Central Oregon, as well as the Portland metro area. So
we have been deficient in that because I was doing it physically. So I'd fly from Chicago and be there for 4 or 5 days, and if I drove to Bend, it would take up a lot of time. That's all done with. So now we can do stuff on Zoom, and I think that's about to change, and we'll correct that deficiency. And Brian Housing Oregon has been a key advocate with us to make sure we do correct it, and not to say that Peter Hanley and CASA have not. So I think we're going to be in good shape, but please reach out to us, not because whether you're from Eugene or whether you're from Southern Oregon, once we know each other, we can work together more closely. And so we're remedying that. And I should say that in the case of Umpqua, it shouldn't be that hard. The CEO grew up in a town not that far from Bend, and he says there was not a stoplight within 100 miles. So he's extremely committed to rural areas and rural development. So let's help us get better on that, and let's get it done.
If I could just add, when we did a 2017 Reinvestment Summit, we really did a lot of outreach to Central and Eastern Oregon. The Ireland Rail gave us a bunch of money to pay for those things. So we had a very diverse crowd, I think. So I would say we've been trying. It's just not easy.
no, I agree. I remember that summit. It was well put together. And then so my second part of the question was around industry, right? So if we want to see more creative financing for co-ops, CLTs, groups like that, I think they also have to be at the table. Those also qualify as CDCs. And so it's not just about geographic, it's about industry-wide to represent the continuum of affordable housing well.
Once again, I think we have to really press in terms of the educational component of that. They need to begin to understand that these deals are good deals, and they're growth areas. They're going to just get bigger. So we really need to push the bank a little more. It's not a question of pushing them to twist their arms, I think, to invest, but to become familiar with lines of business that they have been very minor to them up until now, and we want to see become much larger.
Well, and I'd also add that, we're going much broader. We're looking for small business development in BIPOC communities. We're looking for folks that are doing training. We're much bigger than just the CDC folks. We don't want, CRA has a lot of housing stuff in it, and small business lending is also a key component. So.
Yeah, so this is not the focus of this workshop isn't small business, but we could have had a whole session just on small business and minority-led business. So please reach out to talk to us more about that if that's something that's a priority for you.
Yeah, I think I just want to echo what Jerry was saying about the Columbia Bank's CEO. Really said several times he takes pride in being a bank for rural communities. So I think that's something that we can tap into and hopefully use to help direct some investment into those areas.
And he is the new CEO of the combined bank, and
Right.
although they have major offices in Umpqua's office in the suburbs of Portland, the key corporate headquarters now is going to be in Tacoma.
Right. So the I don't know, you may have heard in the news that Columbia Bank is acquiring Umpqua, which is true, but after the merger, they're using the name Umpqua, which is a little unusual, but
And Umpqua staff will largely remain in place. So it's not they're not cleaning house, and it is something of a merger of equals to some extent.
right. They have committed not to closing a huge number of branches. So we already started the conversation, but I have a few slides to hopefully prompt some ideas and maybe inspire some people to share some stories. And like Jerry said, we're happy to hear nitty-gritty details about financing opportunities and challenges that you all have faced, or stories of successes, things that work. It's always good to share with the bank during implementation examples of what does work. They like to fund proven and tested models and programs. Also, with respect to land trusts and co-ops, I think that's an area that, like Jerry said, we need to educate banks about, because I wonder often if they really appreciate how low risk some of those products are. It might be costly to set it up or develop the expertise to start a lending program like that. But I also think a lot of what we ask for and recommend are really, really low risk loans and investments that banks can actually earn interest on. So like Jerry mentioned, one of the main challenges we heard about was timing, especially in today's market. Being able to access quick funding to purchase and develop properties seems to be one of the biggest challenges people are facing all over the country, really. So I was wondering if anyone had examples of, or war stories of things that worked or didn't work. There's a hand in the back row.
Hi, everyone. I would just perhaps lend a bit of a perspective on institutions that do this type of lending. My name is Joel Millar. I'm with Impact Capital. We're a 501c3 CDFI in Seattle. And we specialize in providing these types, basically all of the types of financing that has been discussed thus far is pretty much what we do on a daily basis, and specifically for these types of applications. Challenges, funding too slow. I think what differentiates banks and CDFIs is banks really do like to stick to a specific model. Risk evaluation is their number one concern. CDFIs are more mission driven. They will be able to evaluate scenarios and execute much faster than larger financial institutions can. So in the example of a parcel of land becoming available and a community group wants to purchase that, but they might not be the typical borrower of a larger financial institution. If they can present a mission-centric proposal to a CDFI, that CDFI is likely to be able to move much faster than a larger financial institution. So I would encourage everyone in this room and online to look at CDFIs for a lot of these funding opportunities. And a shameless plug, Impact Capital lends in Oregon, and we are looking for new partnerships. So on both on the investment and deployment side. So if anyone wants to get in touch with me directly, it's Joel, Joel, at impactcapital.org. Impactcapital.org is our website. So we encourage you to reach out and just have a conversation with us.
Loan that you have for an acquisition now, because volume is something that we're having a really big problem with at price point.
Yeah. Well, everybody knows that dirt's getting more expensive. And I'm hesitant to say that we have a defined limit, but generally we like to stay 5 million and below. But we also have lending partnerships with other financial institutions. Yes, I can. We partner frequently with other financial institutions, even other CDFIs, to accommodate those larger deployments, which might be out of our capacity. And again, sometimes we can make exceptions if the right risk parameters are there and the mission is similar to ours.
If I think someone on Zoom should mute their microphone. I can hear a little background noise. Or it could be next. I think it's next door. Never mind.
Yeah, okay. So in any case, I am Mary Vogel, and most of the people in this room know, because they were here yesterday, my need for better effort in terms of accommodation to my hearing loss. And the best practices are to hold the mic close to your mouth and use as much enunciation as possible. And if you stand up while you are asking a question, you project your voice much better. So I have asked for people to stand up. Most of them have refused to accommodate me in that way. But all right, here, back to my question. You know, both Umpqua Bank and US Bank are basically on the stock market. Maybe this question has already been asked. I hope so. I didn't hear it if it was. But in any case, you know, as Diana Lynn in Brave New Home says, the nonprofit funders are playing an endless game of catch up. And that's catch up. If they expect to, you know, to catch up with the for-profit and all. And so anyway, I guess what I'm saying is, how can a bank, or rather, you know, a bank that is dependent on stockholders, how can they really help? I mean, you know, all this sounds very good, but in the end, it's the taxpayers who are, and the low-income people. You know, my master's thesis in 1978 projected this.
Well, I heard a question.
I- So I didn't understand him either, so I'm going
I
to.
think the question is
Zoom, yeah.
this working?
Mary, can you hear me on Zoom?
I think we can hear you.
Okay.
Yeah.
So this is good business. And banks who begin to expand their CRA activity discover they're making money and they're creating goodwill in their communities, which they can't even put a price on. It's so valuable to them. So there is self-interest even without regulation. But the regulation is important. And so much so, you mentioned stockholders. If stockholders get a whiff that a bank is not fulfilling its CRA obligations, and therefore putting the bank's reputation, regulatory future, and ability to expand at stake, they're going to take action. And we'll help with that action. We're working with partners to introduce shareholders resolutions for third-party racial equity audits, for audits around reinvestment, and working with stockholders. And not all stockholders are billionaires. Union pension funds, for example, control a lot of shares of stock, and they're our allies when we deal with shareholders. So I think the potential is there. Sometimes we just have to organize harder, Mary, I think, to make it happen.
Okay, so my question back to this challenge of timing, whether it's a CDFI or it's a bank providing a line of credit or a construction loan. So the interest rate is the problem. I'm coming from home ownership, so we'd be happy to take, the $5 million, but to pay it back at 8%, we do not get enough funding from the state to make that happen. So I think I would like to see a discussion at NCRC is how low of a interest rate can we get to where it still makes sense for the, oh, okay, you're welcome.
You're psychic. So yeah, we also constantly hear that interest rates are too high, and so always push for low cost patient capital. And yeah, 7 or 8% is, it's really, really tough, especially when we know the bank's cost of funds is much lower. I saw a hand go up.
Thank you. Yeah, the lines of credit are a great idea, but in reality, what we're seeing are these reserve requirements where you have to actually set aside an equal amount of funds in order to access the lines of credit, and then we can't access the lines of credit. So we need all kinds of flexibility around these lines of credit as well. So I wish I had a success story around getting lenders to lend on bridge loans for acquisition, but no one will lend on acquisition except the CDFIs, and the CDFI interest rates are pretty high. But at least we can get some reasonably short-term acquisition loans from CDFIs, and they move fast. So banks really need to get in line with what CDFIs are doing, in my opinion.
So it's not a line of credit if they're loaning off money that they have that's pledged to them,
Right.
And they need to make lines of credit. So let's have this fight, and we have commitments, and so it shouldn't even be a fight in those instances where the commitments are there. It'll be those kind of products are reserved to organizations who have a strong balance sheet in general, and a track record of having done projects. It's like any other lending relationship. So there are those limits on it. As far as the interest rate, if we ask them to go below the standard interest rate, then they are in effect subsidizing the project. That's not impossible, but that would involve setting aside a program specifically to do that with CDCs and other organizations so they can subsidize, put aside grants to buy down their own interest rate. That's not impossible, but if that's what we want, then we need to focus on it.
So I just want to add also, you know, the investments that we were making them to make for patient capital, and we specifically did not call out CDFIs because there were CDFIs in the room. So we wanted to make sure that there were opportunities to make direct investments to nonprofit organizations. So I appreciate, as a fellow CDFI, I think we can access capital a lot easier than other organizations that aren't, but still maybe need a couple $100,000 to get a project going. Secondly, related to homeownership development, I got a couple comments. One, NCRC also works, you know, with the GSEs, with Fannie and Freddie, and the regulations and statutes that really direct those institutions to, you know, work to provide secondary financing, so to have a secondary market. So the duty to serve rules around affordable housing, around manufactured housing, around rural housing. You know, NCRC is also there trying to push the regulators to, you know, put some bigger goals out there for banks to achieve, so that there's different, so we're approaching it from different ways, approaching it from CRA, CFPB, and the GSEs. And then I would also say in the state of Oregon, and my board member and who works at the housing division at the state of Oregon isn't here, so I can say this. We need better home ownership policy in this state to guide, and she's working on it. So you can tell her that I called her in. So I just want to mention that. It's not, you know, the banks, you know, the GSEs have safe and sound rules, and the banks are kind of playing to those. And so there's got to be other places that need to come in, and that's the state, that's foundations, and perhaps other entities. So I just want to throw that out. We can count on the banks for some things, but there's other things that we also need to advocate for.
We just have 3 minutes left, so I don't have any more slides, but I wanted to share this information with everyone and hope that you'll participate. These slides should be available to everyone at the conference. My card is here. If anyone can't access the slides or you have follow-up questions, please get in touch.